So this here is definitely going to be one of the most important video that I've recorded in a while, because as you can see, it's not just only about Bitcoin today, guys. We are also going to look at the overall economy and what must happen for an actual bull market to take place, not just only in the crypto market, but also in the traditional market. So before I dive into this content, please guys, do me a favor and destroy that like button, and to those individuals watching this for the first time, to hit the subscribe button and the bell. Thank you very much. And now let us start with this 12-month percentage change on consumer price index. To those individuals who are unaware about this consumer price index, do not worry, because here the consumer price index measures the overall change in the consumer prices based on a representative basket of goods and services over time, and this is based on US consumers. The CPI is the most widely used measure of inflation, closely followed by the policymakers, financial markets, businesses and consumers. I mean, the next Fed FOMC meeting also depends on what the consumer number is being flashed. So that's why this consumer number actually matters a lot. So if you look at the CPI number, when the inflation was at its all-time high from June 2022, 9.1, all the way until August 2023, 3.7%, you can see inflation is clearly coming under control. But this is not the end. I mean, the Fed's target sits around 2%. We currently sit around 3.7%. So that means the Fed might still hike up the interest rate even if they pause for the upcoming FOMC meeting. But the next year there is definitely some more interest rate hike planned, because you can see in last 2 months the Fed paused the rate hike. So what happened here in the CPI number? You can see it changed from 3% to 3.7%. So this is definitely a number that we have to monitor. The Fed's target sits around 2%. Right now we sit around 3.7%. So please be careful. Even though the Fed has been aggressive in the last couple of months, it doesn't necessarily mean that they will be pausing the rate even for the upcoming year. That could be your mistake, because the goal is to come across 1 to 2% range, right? For that, they must hike up the interest rate. Even though we are currently around 5.3, you can see, I think they might go up to 6 to 6.5, and then we will see this consumer price index reaching the final goal around 2%. So I'm not trying to say what they are going to do next, but I'm just assuming that for the coming days, right, the Fed, even if they pause the rate hike, please do not get fooled. And why? Because if you look at this margin debt down 2.9% in August, first decline since April. And why this is actually a matter of concern? Because margin debt is the total amount of money an investor borrows from their broker through a margin account. Trading with a margin debt can magnify gains, because an investor can benefit from the upside of any stock without having to invest 100%, resulting in a greater profit. So with that being said, trading with margin debt can also exacerbate losses, because if a stock's value were to depreciate, the investor may face a margin call and would need to come up with additional cash to reach the minimum requirements. And now if we look at this margin debt chart with S&P 500 chart, the reason is very simple, because traditional market and crypto market is still correlated. So that's why if you look at this margin debt, if you look at this S&P 500 market cap, this is definitely a sign of weakness what is being flashed right now, because you can see, you just read the headline, margin debt down 2.9% in August. That means from this month, June, July, the margin debt was clearly going up. If you see margin debt going up, so does the S&P 500 market cap, and that will also push the crypto market. Yes guys, margin debt going up means S&P 500 is also going up. Margin debt falls, S&P 500 also falls, and this is definitely right. This is definitely a sign of weakness what is being flashed for us. So if this margin debt is going to fall, So does the S&P 500 market cap. So please be careful. The traders are not confident at this stage, which can be seen through this margin depth as well. And even if we look at something different, I mean, if we look at this Buffett indicator, the Buffett indicator is the ratio of the total United States stock market to GDP. As of September 30, 2023, the ratio is calculated as aggregate US market value $45.62 trillion. Annualized GDP is around $27.39 trillion. So aggregate US market value divided by the annualized GDP, which gives us 167%. So this ratio fluctuates over time since the value of stock market can be very volatile, but the GDP tends to grow much more predictably. So the current ratio of 167% is approximately 38.07%, about 1.2 standard deviation above the historical trend line, suggesting that the stock market is overvalued relative to GDP. So if we look at this Buffett indicator standard deviation from the historical trend line, we are around this 1.2, right? So the average or the historical trend line is this center line, which sits around 0. And when we reach at that level, that will be the perfect time to buy according to Buffett indicator. And along with that, even the price earning ratio, I mean the PE ratio, is a classic measure of stock values, indicating how many years of profit it takes to recoup an investment in the stock. The current S&P 500 10-year PE ratio is 28.9. This is again 43.4% above the modern era market average of 20.2%. So putting the current PE 1.1 standard deviation above the modern era average, this also suggests, right, the stock market is overvalued. The PE ratio suggests the stock market is overvalued. Even the Buffett indicator suggests the stock market is overvalued. So please guys, please, even though we can see very clearly S&P 500 had a very nice jump because we tested this one of the key line of support, right? I don't want you guys to get fooled. Yes, this could be bullish for the coming days. I mean, we could be slowly getting attracted here to the upside towards this upper trend line. That would be nice, right? For the coming days, that would also suggest the market for Bitcoin market will be seeing another rally here to the upside. But please be careful. This here is lower highs, lower lows continuation pattern. So even if the market, even if the S&P 500 does show further bullishness, please do not let this fool you, because to break this chain, to break this bearish continuation, we have to start forming higher highs, higher lows continuation pattern here like this, right? So even if this S&P 500 does shows bullishness, we should be very careful. Even though this will result in some bullishness, be careful. And I don't want you guys to get trapped in another massive shakeout, which could be also on the line, because we know if we look at the open interest holder of CME Bitcoin futures, if you don't know what this open interest is, do not worry, because open interest is the total number of open derivative contracts such as option or futures that have not been settled. So open interest is commonly associated with futures and options market. This one is important. Increasing open interest represents new or additional money coming into the market, while decreasing open interest indicates money flowing out of the market. And now if we look in our case, I mean the large open interest holder of CME Bitcoin futures, is it increasing or is it decreasing? It is clearly decreasing. So decreasing open interest indicates money flowing out of the market. So please guys, please be careful. Even though, right, even though the price of Bitcoin is showing bullishness, even though this Bitcoin dominant chart is clearly dominating the altcoins, right, we can see this could result in further bullishness. We could see Bitcoin showing more strength, more bullishness, because you can see S&P 500 also found support exactly at this falling trend line, the lower trend line. But the overall picture does not look that strong to say that this will be the sign of an actual bull market. So please be careful. Even though the price of Bitcoin is showing bullishness, we have to overcome some of the key line first. There is a possibility of price breaking this 200 weekly moving average and starting with another bullishness like this, we could still see Bitcoin around 30,000, 40,000. But this bullishness might not last. That's exactly what I'm trying to pinpoint here. Even if the price of Bitcoin does breaks out of this key line resistance, for example, this 200 weekly moving average, which sits around 28,000, please be careful. Even after some bullishness, the market might not be ready for an actual marker phase or an actual bull market. So the upcoming month until the next Bitcoin halving could be more of a range bound with some nice impulsive move, and at the end show another continuation to the downside. So this is also one thing what we have to keep in back of our head, because you can see it's not just only the 200 weekly moving average, but also the 30 weekly moving average is rejecting us. So if the price in the immediate short term breaks out of this 28,000 line, right, breaks out of this 30 weekly, breaks out of this 200 weekly moving average, then this will be also playing out as a double bottom formation. So that could result, right, that could result in another bullish continuation around 32,000 and even around 40,000, because if you measure the price already from this double bottom, it clearly indicates once we flip 32, 33,000 where this is in the proper support, you can see 38 to 40,000 will be on the line. So that's why, guys, that's why it's very, very important for a price of Bitcoin to find proper support over 28,000. And even if we look at this bearish scenario, which got invalidated here, right, when the price re-enter inside this, but please do not get fooled, right? It doesn't mean it's not going to break again. It could be another continuation here like this as well. So keep a close eye around 27,700, 27,600 range carefully, because that's where this support is lying around. And also we could be coming back to test the support from the previous temporary raise line before starting with an actual impulsiveness. And I have been saying this since a couple of weeks, the price of Bitcoin, even though it is showing bullishness, does not necessarily mean there won't be shakeout on our way, guys. Please be careful. We are still struggling to break out this 28,000. We can see that right here. Support from this, resistance from this 30 weekly moving average, resistance from the 200 weekly moving average. We have to overcome that resistance, and only after that we are expecting the price of Bitcoin to get attracted around the previous high, which in our case will drag us around 30,000 to 33,000 range. And not just only this, parallelly, even this broadening wedge is going to play out. The descending broadening wedge scenario, bullish continuation pattern will play out, because the price in our case has broken the resistance which we had around 28,000. So in the medium short term, as you can see, once we flip the previous high, then the upcoming days for Bitcoin could look like this. We could see a bullish continuation around 30,000, even 40,000. I have been very clear, because you can see S&P 500 is also holding the support from the descending channel, which could result in a bullish movement for the coming days. That will also push the price of Bitcoin higher, in my opinion, but the resistance around 28,000 must be broken, because parallelly breaking that will also result in another bullish continuation here like this, because the price is forming a falling wedge pattern, a bullish continuation pattern. The only thing what bothers me, even though the price of Bitcoin looks super bullish, is this one here. Yes, the price has broken out of the symmetrical triangle, but the most important thing for me is not this formation what we are witnessing here, the breakout formation, but we are leaving this October as a VCPR. That means in more than 90 or 95% of cases, the price has shown a reversal around the VCPR line, and only after that decided the trend direction. So this line are still untouched, which makes it a VCPR. So this VCPR usually attracts the price as well. So if we fail to break out of this 28,000 here in the medium short term, please be careful. This lower trend line could be also attracting us. So regardless of whatever happens, we know the price of Bitcoin have to break this 28,000 to start with this new impulsive movement, which could bring us around 30,000 and even up to 40,000 range. So these were some of the quick updates that I wanted to share with you in this video. If you like this video, please do not hesitate to destroy that like button. And also, guys, we have new offer. Bybit 30,000 deposit bonus campaign has just started. Along with that, 1,000 USDT giveaway to those individuals who sign up using this referral link, which is given in the description down below. Yes, guys, this link will access you to get this bonuses after initial deposit, and also 1000 USDT giveaway. So if you want to take part in this event, if you want to take part in this campaign, do check the video description. The link is there. Join it because the time is running out. So by saying this, I'm signing out. My name is Anup. Bye bye.